Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at haneyfarms.com. It's time for another edition of the Beef Market Update on RealAgriculture.com with Ann Dunford. Welcome today, Ann.
Hi, Sean.
Okay, Ann, let's start with sort of some newsy stuff. Let's start with XL and the meat recall. Obviously it's been well documented in the news and everybody's probably heard of it or has been checking their fridge and, their beef supply. What kind of impact does this have on a market from a producer standpoint?
Well, on the immediate side, I guess what's going to happen, or what is happening, is we're going to be kind of emphasizing some of the problems we've had in the marketplace even prior to this incident, and that's, again, having trouble getting through as many cattle as we need to. We're behind in our marketings. The kills are small, and I suspect this will slow some production lines down in Brooks, would be my anticipation for the short run anyways. And so we're not going to get cattle cleaned up as any quicker than we were, and that wasn't sufficient coming into September, and so we're going to continue to struggle with poor leverage and long lift times, and of course the impact that's having on our wide basis that we've talked about in the past just continues to kind of emphasize itself. So we were a minus 15 last week, which for the record was basically where we were this time last year, so it's not out of the ordinary, but it means our market is continuing to lose ground vis-a-vis the U.S.
What happens with when you do sell cattle, whether it's through some sort of forward contract or on the cash market, to a packer, and there is some sort of an issue like this, and lift times get long, and as you alluded to, lift times were already long to begin with. What happens in that regard?
Yeah. Well, again, whomever's bought the cattle is going to attempt to get, especially contract cattle, killed on schedule, or at least in the month that they were planned for. There may be some wiggle room, but mostly if the producer kind of agreed to that. Cash cattle, usually there's not a really tight timeline tied to it, and of course those are the cattle that continue to get pushed further and further back. So I expect contract cattle to likely continue to be dealt with in in timely fashion, at least in the months that they were supposed to go. But again, the cash cattle are the ones that are going to kind of go to the end of the list.
So I guess for an update standpoint, so what are they doing there? They have just the amount of head killed in the week has been reduced then?
I suspect so. And again, we know they're back to production levels, but not exactly sure at what levels just yet. But again, until you get right back on track as far as production and sales are concerned, I think it's safe to assume in the short run we're going to be running at a smaller kill level. So again, time will tell just how quickly we can get that ratcheted up. But again, Sean, a lot of these things were festering themselves long before this past weekend's recall, and was sluggish beef movement at this time of year with lots of beef around. And again, we're gonna emphasize that problem even more so now. Yeah,
you had mentioned that you were having a hard time keeping up to the U.S. market. What's happening with the U.S. market right now?
Well, that's the frustrating part for those that are watching. Of course, U.S. market traded. So if you want to talk about our live market, around $1.10 last week, and again this week, we're seeing U.S. trade at $1.26, $1.27. So again, the wide basis, we've had a dollar, wanting to be very strong here in the last, several weeks, but of course last week getting to some 13-month highs, and all those things are impacting the Canadian cattle price in a negative fashion vis-a-vis the U.S. So when you look at that kind of range, $1.10 here in Alberta and $1.26, $1.27 in Texas and Kansas, you've got, again, that's where the $15 plus basis is coming from.
So, so how optimistic maybe we're going to catch up to that market in swift time here, because we do need it.
Yeah, we do need it, absolutely. And again, seasonally, the fact that we've got a wide basis in September is not an overall big surprise to those that have followed this market for years. It's our weakest basis month of the year, typically. The problem is last year, and we seem to be tracking right on 2011 basis trends, since the 1st of July this year. So if we're going to track a similar trend, then the basis is probably going to get wider before it gets better. And last year it took until into November before we saw that number get into that -10 area. So it's a long trek. We do start to typically narrow that gap as we go through the fourth quarter. And of course, as we get into December, we tend to have a tighter relationship. So even though we're losing ground today to the U.S., we can only hope we gain some leverage back, get through this last glut of fall cattle that we've got directly in front of us, and to look forward to some more manageable supplies as we close out the year. And again, that in itself tends to historically tighten the basis back, hopefully into the single digits by then. So, but it's a trek that again producers need to be aware of. And if you've been feeding cattle in Western Canada, you're well aware of this weak basis scenario that we have coming out of August into September and October. So more of the same, unfortunately.
3/4 of the way through September, and we've got the feeder run underway. What sort of story are we starting to write in that regard?
Well, again, it's almost a story of a tale of two tales, I guess. We've got a feeder market that continues to be under pressure in spots in regards to where these cattle finish. They finish against a time frame where it's difficult to put any kind of a margin into them. So that market's been very lackluster and actually has struggled in the last few weeks to even maintain the levels we started the month of September at. But on the flip side, the lighter cattle are looking at a market well into 2013, and the futures market is suggesting that most certainly prices are going to improve as we get into the spring of next year. And cattle that finish against that time frame are showing some strength, or at least some very solid support levels versus the heavy feeder market. So in a nutshell, Sean, light feeder's strong, especially looking out into 2013 finish dates, into the second quarter and beyond, and especially for these light calves that probably are going to go into a background or a grass program. But on the flip side, heavy feeders are continuing to struggle, cattle that are going to finish in this winter time frame of December, January, February.
Is there any sort of, does any of this have to do at all with, I've had a number of feed yard owners tell me that, they plan on backgrounding more cattle this year. If they compare their backgrounding profits last year to their finished profits, they did a lot better backgrounding, so they're going to up that. Does that have any impact on that kind of pricing, or is that just not? There's other factors that overwhelm it.
Well, of course, the biggest driver factor in that whole scenario, or that kind of change of direction, is the whole cost of gain. The price of barley in Western Canada, the price of corn in the U.S. We're going to see more gain attempted to be put on to cattle, whether we're talking about calves into a grass program or lighter cattle into a backgrounding program. I mean, the economics just says the cheaper gain we can put on, the cheaper break-even we can have at the end of the day. And so the number one driver in that scenario and that thought process is, of course, the price of grains right now. So it makes sense why it's happening, and it should, at the end of the day, equal some reduced costs. It's not going to necessarily today equal profits, but it gets you into a different time frame as well.
And let's finish up with, we've had lots of news in the past 2 weeks about large hog operations in Western Canada filing for creditor protection or receivership. What kind of impact does that have on the beef market?
Well, and again, it's nothing new to a beef producer to know that when we've got when times are rosy in the hog sector, it tends to be helpful to the beef sector and vice versa. So the issues of lots of pork losses continuing to mount up, production levels are high, and of course we're running into that time of the year where they're very large. So we've got a seasonal impact going on. You've got this kind of aggressive marketing state going on in the hog sector because losses are so big. The attitude has become, let's get them out of here as quick as we can. So, for example, week before last, we had the third largest hog slaughter in the U.S. ever at 2.43 million head. And going forward, the anticipated kill number in the U.S. is going to be 2.2 million head over the next several weeks. So, long story short, as we've talked about the issues on the beef side, and when we've still got lots of beef through the end of 2012, and on top of that, we've got a layer of increased pork production. So I think it's just another reminder to be looking on both sides of the road as you go down towards. We're all talking about tighter cattle numbers as we get into 2013, tighter beef supplies ahead in the long run. But at the same time, we better be watching, like I say, on the other side of the fence for what's going on in the pork sector. Now, granted, and now through the end of this year, forecasts because of these big losses are for considerably smaller pork production in 2013. But again, it is what it is directly in front of us, and it will have a bearish impact on the beef market.
Does the beef industry have these kinds of issues in front of it as well, or is it just where there is a bit of some separation here?
Well, you can get spreads between beef and pork prices like we do have today. We've got a fairly wide spread, but you can only get beef prices priced so much premium over. There are limits to how much, or historically there have been limits to how much over beef can be over pork. So, but going back in times, we've been in the same boat as far as big beef supplies weighing on pork production and pork pricing. So it does go both ways, but we're in an environment today, Sean, where of course we've sold off the herd for the last several years. We're down in cow numbers, we're down in the calf crop, and we'll be down in beef production from what we were a few years ago. And those things are kind of the bullish background of what's going on in the beef sector. So we're not in that scenario today, but again, it has to be a reminder that large pork supplies can limit the upward movement or how bullish a person wants to get on this beef market in the short run.
Ken, thanks a lot, and we will talk to you very shortly again.
Okay, thanks, Sean.